Hey guys, what is up? It's your boy Vajalarazzi here, and today we are going to be getting into our part 2 of our Beginner's Guide to Cryptocurrency series. In this video, we are going to be covering how to trend lines and diagonal support and resistance. For those that do not know what a trend line is a line indicating the general course or tendency of something. In this case, we will be trading price data on some candlestick charts. So let's just get right into this then. So, why do trend lines matter? Well, number one, trend lines are used to identify bullish and bearish direction in the market. If you can trade trend lines, you'll be able to find out which way the market's going, and you'll be able to find the momentum in which it's traveling as well. Number two, provides entries and exits in bullish/bearish markets. This is going to be really important for you guys because a lot of times when you're beginning to trade, you don't necessarily know when to exit the market or when to enter it. It's kind of a big jumbled up puzzle, and so I'm going to teach you how to do that today. Number three, shows the rate at which the market is moving. By trading the trend, you'll be able to find out how quick the market's going down, or in bullish cases up, and so you'll be able to kind of time it better with your trading plan so that you can give yourself a date and a time frame to get in and out of the trade, and you're going to be able to stick to that. Okay, and number four, the last one, their trend lines are applicable on all time frames. This is going to be great because you still don't know which time frame you're generally going to be sticking to, but the cool thing about trend lines is you're going to be able to trade them every single time frame, whether that's hourly, 5-minute candlesticks, daily, weekly, it doesn't matter, you're going to be able to find them in here. Okay, so what you're going to learn. Number one, how to identify the trend of a market. Number two, how to maximize the risk to reward when trading the trend. Number three, why the trend is your friend. And number four, how to spot a reversal in the trend. And here are some examples of trend lines. This is just a simple drawn up one, but this is actually the full price history of Bitcoin, but you can see it's traveling in the same little diagonal trend line. So this is kind of what we're going to be covering. If you remember the first video, everything was horizontal support and resistance, so this is going to be kind of another step up from that. However, everything's going to be done using diagonal trend lines. So let's get right into this. Okay, so I'm at my screen here. Now, before we get into this, it's important to know 3 basic set of rules that apply when trading trend lines. So rule number one, in a bullish market, you will have a series of higher highs and higher lows. In a bearish downtrending market, you will have a series of lower lows and lower highs. So I've went ahead and drawn this example up here, and I'm going to mark some key points to help you guys kind of understand it a little bit better. So in a bullish market, you'll have a series of higher highs. So let's go through and mark the higher highs. There's a higher high here, higher high there, and we have one final higher high there. Okay, now let's go through and mark the higher lows. Keep in mind this is a bullish uptrending market, so you'll have a higher low here and a higher low there. Okay. Now, let's go do the same thing for the bearish market. So, in a bearish market, remember, you're going to have a series of lower lows and lower highs. So, let's go through and mark the lower lows here. We'll mark them with yellow. So, lower low here, lower low there, and then one final lower low here. Now, if there's lower lows, there's got to be lower highs. So, let's go through and mark the lower highs next. So, we have a lower high there, a lower high there, and then we'll be getting one right here on this trend line. So this is an example of how the trend line kind of moves in both bullish and bearish markets. So now it's important to understand rule 2. And rule number 2 is, what is it that makes a trend line a trend line? Okay, so for a trend line to be valid, it has to have at least 2 points of price contact for confirmation that this is a trend. Now, a third rule I'm going to throw in there is whenever you're trading the trend, wait until the third bounce to start opening your trades. So remember, 2 touches of the trend line is confirmed that this is a trend line. Now, for trade confirmation, I would wait until a third bounce to really be sure that the probabilities are going to be in your favor, that this trend line is going to hold. Okay, so I'll show you what I mean here. Let me get rid of all of this. So here we have a chart of XRP, and I like to use this chart mainly because it shows a lot of really solid trend lines. So let me get rid of this here. Okay, so this is going to also go into my rule number 3, and that's how to draw your trend lines. So there's two different forms of thought that you can kind of go about when it comes to drawing your trend lines, and that's actually going to be either counting candle bodies or counting candle wicks. There's really no right or wrong, it's totally up to your own preference, but for this example and exercise, I'm going to be doing the candle bodies because that's personally what I prefer to trade. Okay, so remember, for a valid trend line, you have to have 2 points of contact upon the trend line, and for trade confirmation, you're going to actually wait for a third touch. So if we come here, I'm going to include full candle bodies for this, so make sure you're not cutting anything off. Okay, so here's a trend line. Do we see 2 different points of price confirmation on this trend line? Yeah, I do. I see one here, I see one here, and I see one here. Okay, so this is a confirmed trend line at this point. We have our second price touch, and then we have a bounce. Now this is where you would have been wanting to start placing your entries and putting your trades in, because this is the third touch. Now the reason why you'd want to wait for a third touch on the trend line is mainly because of the fact that in crypto, in even any market in general, you'll have a lot of times on the second bounce of the trend line, instead of holding and maintaining support there, it'll actually fall through. And so by waiting until the third price touch on the trend line, you're actually going to increase your probabilities of that being a correct trade and one that you can profit on. So these are the 3 rules to the trend line that you need to pay attention for. So now we're going to go through and just draw some examples, kind of show you guys what I mean. Okay, so now we've gone through this first trend, and then price broke out and started making new price discovery points. So we're going to come through here now, counting only candle bodies. So this would have actually been the trend. So here we're going to go ahead and start counting our price touches. We have one here. Okay. We have one here. Now keep in mind, I'm only counting the candle bodies, and it's important that if you're going to be trading with candle wicks or candle bodies, that you remain very consistent in your technical analysis. Any sort of bias is going to really just hurt your overall trading outcomes as far as accurately being able to predict price movement. So whatever you stick to, I just always recommend that you stay very consistent with it. Okay, so here's an example of a trend line that we've got. Now we have one price touch, and then we have a second one here. Now this is why it's really great to use trend lines when it comes to spotting reversals. Because if we look here, we had this big rally, this big bull run that happened. Now one of the hardest parts of trading is actually deciding when you're going to exit the market and when you're going to enter it. Now, trend lines can be useful in this regard because it helps you find some really solid entry points on the trend line, and it also helps you decide when that trend line has failed and when you need to start taking profits and getting rid of some of your positions. So if we come here, we have our 2 confirmation points for that this is a trend, and then over here, what we have is a very, very clear break of that trend with this big red candlestick. Now remember, I was only counting the candle bodies. So the fact that this body closed below the trend line shows that there's becoming more of a bearish sentiment in the market, and the trend is less likely to hold. And so what happens shortly after that? We have this green candle that comes up to start retesting the breakthrough of the trend line. And then we have up here, we have this hanging man formation, this candlestick pattern with this big wick that's starting to come in. Now this is, you would have wanted to start taking selling actions here and laddering out your position as the price went up. And this would have been confirmation that this trend line is not valid anymore and it's not going to hold, because we're now getting rejected off of that as resistance. So this is why it's important to use the trend line. You can get very solid entries and exits the farther along you trade it. For example, if you would have waited for this third confirmational touch right here, you could have had a very solid entry and a trade. Just for fun, how about we take a look and see what you could have netted. Okay, we'll just count the middle of this candle. So yeah, that's 250% move right there that you could have caught just by knowing how to trade the trend line. The trend line is always your friend because it sets up yourself very nicely for low risk, high reward setups like this. Okay, now we're gonna go take a look at, let's go look at Litecoin. Okay, go full screen here. So this, we're going to start taking a look at the bearish downtrending markets and start looking at the lower lows and lower highs. Because keep in mind, we did just look at the bullish sequence, so let's go see if we can see the adversary. Okay. So remember, I wouldn't personally be taking trades unless there's a third confirmational touch of the trend line. However, sometimes by waiting until that third touch of the trend line, you're actually going to be missing out and getting in a little bit late. So that's why it just comes down to your own trading plan and being able to time the right entries accordingly. So here we have an example of a downtrending market with lower lows and lower highs. So let's go mark the points in which price makes contact to this trend line. We have one here. We have one here. Now this one doesn't quite reach all the way up to that trend line, and this could have given us our third confirmational point in which we could have shorted that. Now you're going to get the best probabilities if you get that third confirmational touch. However, you can't always be perfect and the market's not always going to move in the most symmetrical ways. So you're not always going to be able to find that. However, if it was me trading this, I would wait until I could find one of those third confirmational touches before I opened. In this case, we're in a downtrend, so you would open a short position. So here's an example of a downtrend that we have. Now, these are a set of lower lows. So we have lower lows here, lower low there, lower lows here. And then we have higher lows, or lower highs, I should say, excuse me, here. Almost one here. You don't really see it too many of them. You could count this. You don't see a whole lot of them in this exact example, which is why it's important to get that third confirmational touch, because if you were just in here trading, you're not getting a lot of accurate data to really base your trade off of, to where it's just more choppy downtrending more than anything. So let's come here and see if we can find a little bit better of an example. Okay, so in this one paints a better picture of the third confirmational touch to actually begin taking trading positions. So here we have, and I'll mark these with green. So here we have a point of contact. This one I would count due to the fact that it is that close. And you have this third one over here. Now, this is where you would have been starting to take selling precautions and started to short sell the market here. And this is why it's important to wait for that third one, because when you find a third confirmational touch on the trend line, it's relatively really good entry and be able to ride this down. So if you were to take a sell, and we'll just mark it right here, you could have got 25% swing, could have got 33% swing, and then if you would have held it to the bottom, you could have had 45%. And that's all just understanding trend lines and knowing when to enter and exit the market. So this was a good example of what you could expect in a downtrend. Okay, let's go take one final example here and see what we can make of it. Now, let's mark our points of contact along this trend line. We have one here, and this is another example of one of those where you could count it as 3 right here, or if you waited until all the way down to here to count it as 3. But you could say there's one right here, most definitely, and then right here. So this is one that happened a little bit later in the downtrend. You wouldn't have wanted to necessarily start taking too big of selling positions down here due to the fact that the prices have already been pushed so low. You're running a higher risk of price starting to go back up and bounce on the upside. But the reason why this is still important, even if you weren't looking to take short selling positions in this area, you could be saying, okay, this trend line is held 3 different times and it keeps going down. But then what do we have right here? We have a very clear break of that actual downtrending resistance. So even if you weren't able to pull off a short sell in this area over here, or even in here, if you were counting this, then you're at least understanding that prices are this low and we did just break out of this major point of resistance that price has fallen off of 3 or 4 different times. So this would actually be a very good time to be entering the market as far as how low prices have gone down due to the fact we've broken out of this major descending resistance, we've broken out of this major descending resistance, and now we have this one final last one. And I'm not saying that this is going to be the for sure bottom or anything, but this is a very, very bullish looking setup if we can maintain support on top of this trend line. Okay, so this is an example of a downtrending market where you're going to have a set of lower lows and lower highs. I think that's about all, and I covered most of it in this video. If you liked this video, always remember to like and subscribe, and leave a comment if this helped you. If there's anything that you see that I can improve on, always leave some constructive criticism, because I'm more than happy to help learn to better educate you guys and just better educate myself. So thank you so much for watching, and I'll see you guys next time. Peace out.